Hello everyone, welcome to the new session of Banking and Financial Awareness with Pragya Saxena this side. So, you all know we are covering the Banking and Financial Awareness portion of ours, and this is going to be the 17th class of ours in a row. So friends, here we are preparing for the upcoming Indian Banks exam for the post of LBO. Now our team Knowledgist is offering you all a complete new course. In this course, these new batches will be comprising of live classes, recording sessions would be there. If anyone would be missing out with the live classes, along with a complete set of notes, mock test, and further guidance like one-on-one session, doubt clearing sessions, etc. Everything would be there for you. So, for this upcoming exam of LBO, that is Local Bank Officer Exam of 2024, if you are interested and aligned, then you can be joining and going through the description box of ours, and there you will be getting the link through which you can get the whole information about this whole new course. Okay, so now this session of ours, it is kind of a test series. Here we would be solving the banking and financial awareness portion in approach of ours, clear, in the form of multiple choice questions. So yeah, without wasting much time, now coming to the very first question. See, our very first question, what it is asking, it is talking about the liquidity coverage ratio. Okay, it is asking how is the liquidity coverage ratio, that is LCR, expected to change under the new RBI guidelines. Okay, so here we have to tell the change in this LCR. If we talk about or go through the expected changes in it through the RBI's new guidelines. So the options are whether it has increased significantly, decreased to 100%, increased digital payment outflows, drop to a median of 117%, or stay the same, which means there are no certain changes in the LCR being expected under the new RBI guidelines. Okay, so now I would be waiting for 5 seconds for you all to reply me out. Good evening. Yes, good evening, Rohit. Hello, Sandeep. Jimmy Tiger is saying the answer should be C. And Rathod, it should be C. Okay, great. Anyone else? Would be waiting for 5 seconds. No issues, as the session is, we are just into the session. So it has just been started. So there is no issue in waiting for others. Rohit C, Sandeep C. Great. See, before going through what is the correct answer gonna be, let us talk about what is LCR. Everyone must be knowing LCR is liquidity coverage ratio as given in the question itself. See, it is basically a measure of a bank's ability. What it is? It is a measure of bank's ability to meet its short-term obligations. Okay. And it is how can, now the second question arises, how can we calculate it out? So the LCR ratio, it can be calculated by dividing bank's high quality assets by its estimated net cash flows over a 30-day period. And what is the basic need of LCR? The basic goal is just to ensure that a bank can withstand a hypothetical financial stress scenario if there is any. Clear? So now we talked about how to calculate it and what is the purpose. And see, one more thing is there. It is also important if we talk about the requirement. Then if in international term, on an international basis, active banks, all the banks that are currently active in India, they must have an LCR of at least 100%. This is important to remember. Internationally, the active banks must have an LCR of at least 100%. Clear it is? So now would be coming back to the correct answer. Praful is saying C. Subhash is saying it to be C. Let's see what is it. So the correct option, friends, this time it is option D. That is drop to a median of 117%. See, after the whole new implementation of the new LCR guidelines, the median LCR of banks is expected to drop to 117%, which is still above the required minimum. Okay, now would be coming to the next question. What it is asking, what major change has the RBI proposed to the check truncation system, which is CTS? Whether it is reducing the check processing fee, option B, extending the check clearing cycle to T+2, introducing batch processing, transitioning to continuous clearing with on realization settlement, or option E, that is increasing the check validity period. What are we supposed to tell here? We have to tell the major changes or the major change that RBI has now proposed to the CTS. What is CTS? Do you guys know? What is check truncation system? Okay, so basically, friends, see, while you guys are replying me out with the correct answer, if we talk about what is CTS, then it is basically an online system that electronically clears checks. How do it work? It electronically clears checks by capturing, okay, firstly, by capturing and transmitting images of checks and their MICR data. Now, what is the MICR data of checks? It is the magnetic ink character recognition data. See, CTS, what is it? It was basically started by RBI, and it is a project under RBI that was started in the year of 2010. What was the reason? What was the main goal behind its starting up? It was to speed up the process of clearing checks. As you all know, previously, the processing of checks, of clearing checks, was not that fast. Nowadays, it has come to an aggregated speed. Why is it so? It is because of the new CTS system, which is a project started by Reserve Bank of India. Clear it is? So now let me go through the correct answers, or the answers you guys have gone through. Sandeep B, Praful D, Jimmy D, Rohit D, Amom D, and Praful. Yes, Praful, very good. It's check truncation system. Rohit Patil, by electronic mode check clearing. Very good. If we talk about it in a short manner, then of course it is exactly the same what you guys are telling it to be. Okay. So now talking about the correct answer, see, it would be option D this time, which is transitioning to continuous clearing with on realization settlement. See, RBI basically proposed moving CTS from batch processing to continuous clearing. Now, it basically allows checks to be processed and cleared within a few hours during business hours. Clear? Coming to the next question. What it is asking? It is asking, which of the following is a primary objective of the new guidelines issued by the IBBI? What is IBBI? It is the Insolvency and Bankruptcy Board of India for the Committee of Creditors. What is the question? It is basically asking the primary objective of the new guidelines issued by IBBI for the Committee of Creditors. Whether the correct option would be enhancing the role of unsecured creditors in decision making, expediting decision making and maximizing asset value, increasing the influence of financial sector regulators on the COCs, encouraging litigations to resolve creditor disputes, or option E, that is reducing the number of COC meetings per resolution case. What, according to you guys, should be the primary objective of this new whole guidelines issued by IBBI for the COCs? Would be giving you 5 seconds to reply me out. What should it be? Praful is saying answer C is correct. Okay. Anyone else? Anyone else? See, if we talk about the static portion of this question, then IBBI, which is the Insolvency and Bankruptcy Board of India, its current chairperson is Ravi Mittal. Who is he? Ravi Mittal. Ravi Mittal, he's basically, do you know, he's basically an IS officer. And currently, he is acting as the chairperson of IBBI. And the headquarters of IBBI are in NDE, that is New Delhi. Clear it is? Now, let us see whosoever has answered. Amom C, Rohit Pranav, Sandeep, Rohit Pranav and R Shweta are saying C. Sandeep is with option D. Okay. Let us see. The correct option this time, friends, it is option B. What is it? It is option B. That is expediting decision making and maximizing asset value, which means the primary objective of this whole new guidelines being issued by the IBBI for the COCs is to expedite decision making and also to maximize the asset value. Clear? Now would come to the next question. It is asking which factor is likely to limit the domestic fundraising efforts of banks through high cost funding options according to the RBI bulletin. So whether it is a factor called high statutory liquidity ratio, low CASA deposit share, rising inflation rates, increased non-SLR investments, or option E, that is declining credit growth. What according to you should it be? Anyone? We are talking about the factor that is most likely to limit out the domestic fundraising efforts of banks. How? Through the high cost funding options. If we go through the new RBI's bulletin, what it is? Would be waiting for 5 seconds. See, you must be thinking, ma'am always keep on saying 5 seconds, 5 seconds. Why is it so? Because we guys are just sitting apart, by the side of different screens. If we would be there in person, no 5 seconds would be there. But yeah, as we are far apart, so we would be a dependent person on the technology itself. Daydreamer is saying, okay, Daydreamer is finally here. Daydreamer is saying it to be option B. Jimmy Tiger, option C. Okay. Anyone else? There are a number of people, a number of friends of mine who are currently going through the session and just 2 or 3 are replying. Why is it so? Amom C, Rohit B. Great. So this time the correct option would be B. That is low CASA deposit share. See the RBI bulletin. It basically indicates that a low share of CASA deposits could, what can it do? It could basically curb banks' ability to raise funds domestically through the high cost funding. Okay. And it is because of the potential squeeze on net margins. Okay. So yes, here we were talking about the CASA deposits. What are these? These are the current account, saving account, deposits. What is it? It is the current account, saving account, deposits. See, CASA deposits, what are these? These are the current and saving accounts deposits, okay, that any bank raise from its depositors. And we have already gone through what does it stand for. And these accounts combine the feature of both. The feature of savings account is also there along with the feature of a current account is also there. Okay. So yes. Now coming to the next question. It is asking, as per the RBI bulletin, what might banks be compelled to do due to stress in the unsecured loan segments? If we go through the RBI's bulletin, then what would or what should be the or what is the thing or the action banks are being compelled to do under the stress in unsecured loan segments? Increase statutory liquidity ratio, decrease credit growth, align loan growth with deposit growth, increase non-SLR investments, or raise interest rates on savings account. What is the thing which banks are completely compelled to do due to stress? Daydreamer, C, Jimmy C, okay. So this time the correct answer would be yes, it is C. That is align loan growth with deposit growth. See, the whole stress and unsecured loan segments such as personal loans and credit cards are there. When we talk about the unsecured loan segments, they force basically the banks to align their loan growth more closely with the deposit growth. Why? To manage risk effectively so that the banks can be managing their risk effectively. So yes, Amom, Praful are saying the answer to be correct. Now, the next question is asking, what primary objective did Finance Minister Nirmala Sitharaman set for the PSBs during the recent review meeting in August 2024? Whether it is increase the number of loan advances, enhance cybersecurity measures, initiate special drives to garner deposits, implement blockchain technology in banking, or merge regional rural banks, that are the RRBs. We have to tell the primary objective which our finance minister has set for the public sector banks during the recent review meeting in August 2024. What should it be? Anyone is having any idea? Would be waiting for a few seconds. Jimmy is saying it to be C. Okay. Anyone else? Sandeep D. Okay. Okay, okay. No issues. Anyone else? Okay. So the correct option this time is going to be, friends, option C. So yes, Amom is correct this time. It is option C, which means the primary objective is to initiate special drives to garner deposits. And the finance minister has emphasized the need for PSBs to focus on deposit mobilization. How? By conducting special drives due to slower deposit growth being compared to the loan advances. So this, for this particular sake of question, the correct answer would be option C. Next question. What short-term funding methods have banks primarily used to meet the rising credit demands? What are the short-term funding methods? Long-term bonds and equity offerings, interbank repo operations and infrastructure bonds, public deposits and savings account, or certificate of deposits and fixed deposits, government securities and corporate bonds. Anyone is having any idea? Would be waiting for a few seconds. Okay. So, Sandeep, you are asking what is the meaning of garner? Here, the meaning of garner, it's not regarding the gardening or something. No. Meaning of garner is basically to collect out something. So, collect is basically a synonym for the word garner, okay, which was being used in our very previous question. Is it okay, Sandeep? So, basically, whenever we gather any information, like I can say all the information I garnered about the new course is being stored in my file. So, this is how we use this word, that is garner. Okay, Sandeep? So now coming back to the question, few have already answered. Jimmy E, Amom E, and Athor B, Sandeep E, and R Shweta B. Daydreamer, maybe option B or C is correct. No issues here. So this time the B option is correct, which is interbank repo operations and infrastructure bonds. Okay. So yes, the short-term funding methods which banks are primarily being used to meet the rising credit demand is the interbank repo operations and infrastructure bonds. So as to address liquidity shortages due to the credit deposit gap, banks have primarily relied on short-term funding methods such as interbank repo operations and infrastructure bonds. Clear it is? Now, coming to the next question, which is asking, under which act has the Finance Ministry authorized securities firms to use Aadhaar for the KYC process? Under Companies Act, Banking Regulation Act, Prevention of Money Laundering Act, that is PMLA, or Securities Contract Regulation Act, whether option E, that is Information Technology Act. What do we have to answer? We are supposed to bring back the name of the act which the Finance Ministry has authorized securities firms to use Aadhaar for the KYC process. What is the name of that particular act under which this new decision has been taken? And that what is saying to be it to be option C. Okay. Few more. Anyone is there who is willing to answer? Jimmy Tiger C. Great. Anyone else? Okay, okay. No issues. So the correct option this time would be option C, my friends. What it is? The name of the act is Prevention of Money Laundering Act. So under this PMLA Act, which is Prevention of Money Laundering Act, the Finance Ministry authorized securities firms to use Aadhaar for the KYC processes. And this whole authorization for securities firms to use Aadhaar for the KYC process has been issued under this PMLA, that is the Prevention of Money Laundering Act. Clear it is, I guess. Now coming to the next question. What it is asking? What is the annual renewable requirement and cap on term loans for entities using Aadhaar-based e-KYC under the latest guidelines? we have to tell the annual renewable requirement and cap on term loans for those entities which are currently using Aadhaar based e-KYC under these latest guidelines. So whether it is rupees 30,000 monthly renewable is there, rupees 50,000 and biannual renewable is there, and rupees 60,000 annual renewable, rupees 1 lakh quarterly renewable, or it is no cap and renewable requirement, which means there is no cap and no renewable requirement. Anyone? What should it be? What you guys are getting it to be the correct answer? We have to tell both the things, whether it is the amount, which is the annual renewable requirement, or the time period, the cap on term. Jimmy is saying it to be option E. Okay. So the correct answer this time would be option C. That is rupees 60,000 and annual renewable, which means the entities which are using Aadhaar based e-KYC with the OTP authentication, they are being subject to an annual renewable requirement and a cap of 60,000 on term loans. Okay. So this time Among was saying it to be correct. And Rohit, Daydreamer and Rathor, the correct answer this time, my friends, would be option C. So remember it to be 60,000 and annual renewable. Clear? Next question. Which of the following factors contributed to RBI Governor Shaktikanta Das receiving an A+ grade in the Global Finance Central Banker Report Cards 2024? This question is already providing an answer within itself. It is telling us new information that the RBI Governor Shaktikanta Das has received an